markets. We have got 10 ways for you to ride the gold rush right now. Chip Hanlon is the president of Delta Global Advisors. Chip, great to have you with us.
Thanks for having me, Melissa.
There are so many ways right now to play gold, Chip. You take a look at the stocks. There are also ETFs, which essentially buy the bullion, put it in a vault in London, and that's the ETF. What are some of the advantages and disadvantages of investing in companies that mine the gold or mine the metal versus the ETF that actually own the commodity?
Sure, it's simply a matter of preference for investors. By owning GLD, you're right. You own exposure directly to the underlying commodity, the metal itself, and with a very low expense ratio of just 40 basis points a year, GLD represents a great way, that's the ETF, for investors who would like pure exposure to the metal. A number of people like to invest, however, in the gold mining companies, and the thinking is that in a gold bull market, their earnings will be more leveraged to the rise in the commodity price, and therefore you can capture greater upside appreciation as a result.
Right, we've got 10 ways, so I want to dive right in, Chip, so we get to all of them. First of all, the big names, and you like Newmont, Goldcorp, Barrick, Anglo Gold, and you mentioned that some of these names and some of these miners are more leveraged to when gold has the upside. Can you give us an idea of how leveraged, say, Barrick might be to when we see $900 an ounce versus $700 an ounce?
You know, it's interesting that you focus on Barrick because it's actually one that, for the gold bugs, they've often derided Barrick as a hedged producer, meaning rather than having unhedged production, leaving their revenues fully exposed to the fluctuations in the price in gold, they used to sell forward their gold production and they would cut themselves short if there was a big rise in the price of the metal. They wouldn't capture the full upside in terms of revenues. Well, they no longer hedge in that way. I think many investors might still think of them as a hedged producer that doesn't give you full exposure to the upside price in gold, but actually they only hedge to a small degree now, which is to offset production costs at some of their exploration sites. And so I think that actually represents prudent management, and the stock is actually very well exposed to the fluctuations, the potential upside increase in the price of gold.
Let's move on to the mid-cap gold plays, Chip, and you want to focus on Nova Gold. What's so special about this one out of the ones that we're showing our viewers on the screen here?
Well, one of the ideas behind the mid-caps in general is that we're seeing a lot of consolidation in mining companies of all sorts, and so a mid-cap producer might be more apt to get taken over. But Nova Gold, that aside, I'm not suggesting it's potentially going to be bought anytime soon. What makes it interesting is that it is going to begin producing from what is potentially a huge underground resource up in Alaska. This is a Canadian-based producer that actually trades here under the symbol NG, but its property in Alaska is assumed to be very large and might really mean that this stock is dramatically undervalued based on its resources.
And for those who might be a little bit braver out there, Chip, let's talk about your speculative plays, because the one that you want to focus on is the silver ETF, SLV, which is actually one that is leveraged to the actual commodity as opposed to miners, correct?
Well, yeah, and it's interesting. Rather than having to dip their toes into the most wildly speculative small-cap gold mining stocks, silver represents an interesting speculation on gold. What silver tends to do is it tends to move up last in a bull market. You know, if you look back at, say, for reference, the NASDAQ bubble, what happened is at the very end of that move, you know, after all the blue chips had run and after all the mid-caps had run, if you look back, you can see, that was a top because all the garbage, the penny stocks, the really speculative stuff started moving. Well, silver actually acts in a similar way. It will tend to spurt highest near the end of a move in precious metals, and actually one of the most bullish things that gold has going for it now is that silver has not blown off to the upside, and it suggests that speculative froth has not returned completely, that there may be more upside in the precious metals.
Okay, you heard it right here. There could be a silver rally ahead. Thanks a lot, Chip, for your time and your 10 ways to play gold.
Thanks, Melissa.
And